Welcome to our weekly market update at Trust Markets. This week, we will be discussing the latest economic data releases and their potential impact on markets. On Monday, we will see the release of Chinese GDP. The Chinese economy grew at a slower pace in the first quarter of 2023, as the government implemented a number of COVID-19 lockdowns that disrupted economic activity. The GDP growth rate of 4.5% was below the government's target of 5.5% for 2023. However, the government has since eased some of the lockdowns, and the GDP growth rate is expected to pick up in the second quarter. The impact of the Chinese GDP annual growth rate on the market and Chinese yuan is mixed. On the one hand, a weaker than expected GDP growth rate could weigh on investor sentiment and lead to sell-off in Chinese assets. On the other hand, a weaker yuan could make Chinese exports more competitive, which could support the economy in the short term. On Tuesday, we will see the release of US retail sales. US retail sales unexpectedly rose in May of 2023 despite rising inflation. The strong retail sales data is a sign that consumer spending remains resilient in the US, even as households are facing high prices for goods and services. The impact of US retail sales on the market and US dollar is positive. Strong consumer spending is a sign of economic strength, which could support the stock market and the US dollar. On Wednesday, we will see the release of UK inflation rate and Euro area inflation rate. The UK inflation rate held steady at 8.7% in May 2023, unchanged from the previous month's 13-month low and above market expectation of 8.4%. The Euro area inflation rate decreased to 5.5% in June 2023, down from 6.1% in the previous month and slightly below market expectations of 5.6%. The high inflation rate in the UK is a major concern for the UK government, as it is putting a strain on household budgets and could lead to a slowdown in economic growth. The Bank of England is expected to raise interest rates again in July in an effort to combat inflation. The decline in the euro area inflation rate is a positive development, as it suggests that inflation is starting to come under control. However, the rate is still high, and the ECB is expected to continue raising interest rates in an effort to bring inflation down to its targets. The impact of this data on the markets and currencies will depend on how investors interpret them. Thank you for joining us, and we look forward to seeing you in the next update.